Good morning, everyone. It's good to see. It's a pretty good showing, I think, given that there was a cocktail reception yesterday.
And it's Friday in London, which I think is now a day off, isn't it?
Exactly.
They're all laughing. They know it's true.
So I'm thrilled today to be joined by David Mercer, CEO of LMAX Group. So you're here because you run a crypto exchange, but your background is actually running an FX exchange. And so I guess to kick things off, I mean, on a scale of 1 to 10, 10 being the most, how much do you regret getting into crypto?
1. Now, look, absolutely zero regrets. The only regret would be that we didn't do it earlier. That's the fact. You got to look at relative performance. And if you think about it, I wish the rest of my business, the FX business, had grown as much as crypto in the 5 years since we launched. So we're now in year 6. We launched LMAX Digital in 2018. And we had no idea how it was going to go. In fact, that was on request from the proprietary trading firms who trade a lot of foreign exchange within LMAX Group. So I think year 1, we probably traded $20 billion in crypto, and we were really happy with that. 2021, we traded $500 billion. Okay, 2022, it was a tough year. We traded $200 billion. That's 10x growth. Just look at the Bitcoin price. We entered the market, it was trading at $6,000. Could it go to zero? Maybe. You look during COVID, it traded below $4,000. It looked like it could go to zero. There's another asset called oil that looked like it was going to go to zero, went below zero. Bitcoin didn't. So Bitcoin today is over 30,000. Either which way you look at it, so the price is 5x, our volumes are 10x. If the rest of my business grew 5x or 10x in that time period, I'd be pretty happy. But moreover, it's the segue into the future of capital markets. So there's no doubt in my mind, and there's no doubt, I think, if you ask anyone in the city of London or the cities of Manhattan, that the future of all assets will be digital within the next decade. The proof of concept for that digitization or tokenization of traditional assets is crypto. So yeah, really happy we did it. Should have done it earlier, but I guess I'm not that bright.
I mean, you're not really a crypto bro in the sense that your company...
Wannabe.
You're a wannabe crypto bro, but your company is still, I guess, more geared toward institutions and professional traders. Where is institutional demand for crypto right now?
That's tough. So there's no doubt, right? In case people don't know LMAX Group, so we operate 5 exchanges. Only one of them is crypto. The other 4 are foreign exchange. So we operate 2 in London, 1 in New York, 1 in Tokyo, 1 in Singapore, trade around $25 to $30 billion of FX every day. So moving into a new asset class for us, it's not always that easy. But our chief customers were saying, we want to trade this asset class. So it was just a natural extension for us. And I missed the crux of your question, which was?
Where is institutional demand?
Yeah, so that's where it was. The assumption was the big group that was missing were banks. So you launch in 2018, and you go, the banks are coming. So the banks are the gatekeepers to, as you all know, the swathes of institutional money that's out there. They haven't come. And the word was they were coming, but there's a couple of big blockers. The major blocker is regulation. There's no regulatory framework. So at the moment, there's no doubt, I'm not going to be a crypto bro and tell you the institutions are coming, don't bet your money, bet your life, and buy crypto. I can't say that today because there's no access for traditional asset managers today to get into crypto because the gatekeepers, the credit mechanism provided by banks isn't there. I think if you look behind that, so 2023 is not going to be the year of institutional adoption. Anyone who tells you is basically tells you that's the case, is talking their own book. But if you look under the covers, under the hood, bulge bracket banks have invested $8 to $10 billion in blockchain technology and crypto companies over the last 3 years. Some of the biggest banks in the world have digital asset teams that number in the hundreds. And the argument, which I think is a poor one, by the way, is that it's blockchain, not crypto. If you believe in blockchain, you need to have something of value to move across that digital ledger. So they know it's coming. The reality is the lack of a regulatory framework, the lack of clarity makes it hard for them to touch traditional crypto assets today. My hope is, starting in Washington, that we'll have a framework established this year, which then will open the gateways to that institutional money. But make no mistake, they're all preparing for this to be the case.
I mean, would you agree that if anything, banks are even less likely to get into crypto now compared to maybe a year ago?
No. So look, they touch it. It's client demand. I mean, there was a lot of fear out there. So they are accessing it today. You know, they're trading the future. By the way, the future is the worst product to trade in the crypto industry. It's a 5-day market for a 7-day product. Good luck with exiting your risk at the weekend when your market shuts at 5 p.m. on a Friday. So they're offering that access to their customers. They're offering, you see it in Canada, they're offering ETF access. There's various NDFs out there. They're preparing for it. And a lot of the bank initiatives are on private blockchains. Look, private blockchain is not a blockchain. It's just a private network. But they know it's inevitable. If you're really sitting there today and thinking that in 10 years' time, we're going to be waiting 2 days to settle fiat, or that we're going to move securities around on pieces of paper, and we're going to have 20,000 people in the back office of one bank reconciling a record, which if you move it onto the blockchain will be, there's one record ever, it's immutable, then I think you're kidding yourself. So look, banks entering the crypto space is inevitable. There's a couple of blockers. But let's take a wider view on this, right? Just take a 10-year view. I guarantee you that every bulge bracket bank and every bank in the world will be offering crypto products to their customers.
You've heard it here. So it's like one of those moments on Twitter where you're like, remind me in 10 years. I mean, how do we get to that vision you just outlined where traditional assets are going to be digitized? And kind of where does that leave, you know, the Bitcoin and ETHs of today?
Well, I think I said it in sort of question one. They are the proof of concept. So, not to belabor the point, all the crises you've seen, all the bank crises you've seen in the last 20 years, they come down to 2 or 3 things, right? Failure in settlement, payment, and reconciliation. Well, blockchain solves, a lot of that. So if you think about it, we can avoid all of that by just using this digital ledger. So it's inevitable that you're going to be trading digital securities. There are bits of the market out there, I know in our own FX market, things like swaps, things like forwards, NDFs, are still voice traded, right, or trading the UI. So they've skipped the whole electronification, really. They're just going to move, they're slower traded products, they're just going to skip that completely and move straight onto the blockchain. Now, we're going to need to have a digital form of collateral. What is that digital collateral? Frankly, I don't care. I don't sit here as a Bitcoin evangelist. But right now, the easiest one to move is Bitcoin or Ethereum, 7 days a week, 24 hours a day, very efficient use of your capital. Do you use USDC, probably the best of the stable coins? Do you use a digital dollar? If they get round to it, for what it's worth, I don't think there'll be a digital dollar, right? I think there's one side of the house have major privacy concerns, and I don't think there'll be a digital dollar. Digital pound, digital yen. So you're going to need that, and it's all about how you efficiently invest your collateral or your assets. And I don't know, I can't tell you today if it's going to be Bitcoin or it's going to be some form of digital fiat. But invariably, all of us will be moving digital or cryptocurrency within the next few years.
I mean, today we have seen a rebound in crypto. I mean, Bitcoin back to 30K, ETH is rallying. Are we back to the good old days in the crypto market? Like, what are you seeing on the ground?
Short answer again, no. Look, it's very thin. And look at it again, the total value of crypto today is $1.3 trillion. Sounds big, but it's tiny in terms of the world that you exist in, right? There's 100 million of assets under management today, $200 trillion of assets under management and in custody today. So we're talking about 0.5% to 1% of the world's assets. At its peak, we're talking about an asset class that was 3 trillion. For this to be credible, for this to be more than a desk on a trading floor in an investment bank, it has to go 10x from here. The price pump is based on very, very thin liquidity. It doesn't take so much to move Bitcoin today from 25,000 to 30,000. So we're not there, but you would say at the peaks of, I don't know, was it 64,000 or something, that there was a lot of fluff. There was a lot of Bahamian style bluster there. There was a lot of bros pumping whatever type of coin you want to call them, but certainly weren't anything of value. So we're not there, but at least it's real. It's mostly retail, but it's real today. The last peak was mostly fluff, a bit like .com, right? So you go back to 2000, you look at .com, great companies like the Amazons and the eBays of the world were around in 2000 and they existed. Amazon traded from $111 to $7 at the .com crash. That's what you're seeing in crypto now. So horrible political phrase, build back better, but this version of crypto is better than the crypto high that you saw in 2021.
Right. Yeah, I guess it's like every time there is a crypto winter, it's like time to build, as they say. I mean, you kind of mentioned at the start that you got into crypto because that was what was demanded by a lot of your prop trading clients. Are they still in it? Have they left crypto at all?
Not one of them's left. So we're talking about, put it in perspective, these aren't just crypto-only funds, crypto natives as they're known. These are the biggest trading firms in the world. The biggest trading firms of all the future exchanges in Chicago, in Brussels, right? The top 5 names. They entered crypto first. Of course, when you saw what happened in the Bahamas, everyone tested exchanges, brokers, systems. They tested us. They withdrew all their funds, and they deposited back probably within a week. Not one of them has stopped. They are perhaps trading less just because there's less interest around the market. And there's less noise around this institutional adoption right now. But they're in it for the long term. And ultimately, if you think about it, what do they do for a living? They make markets in every asset class in the world. So it's entirely natural that they're the best market makers in this newest asset class.
I see our timer is flashing very violently. Thank you so much, David. I feel like the takeaway here is, it feels like the crypto market hasn't recovered, but in 10 years, we will see if David is right.
I'll be here and let you know.
Great, thank you so much.
Thanks, Justina.